My name is Shane Hindy. I am the founder of therationaltrader.com. I run a live trading room where I day trade futures. I trade with real money, live in front of people every day. I have a very clear understanding of what it means to be a trader and what it takes to learn how to trade. It looks like our audio tests are good. Now we're going to talk about the 3 challenges you face as a trader, but let's just start with the trades I took yesterday in the crude oil market. This is yesterday, Friday the 9th, and you're looking at the platform here is Sierra chart, and on the left here is when the pit session opens at 9 o'clock Eastern, 6 o'clock my time on the West Coast. And off the open, the market advances strongly. That blue diamond right there is telling me something, though. It's telling me that I don't see a lot of buying on this bar. The market has to go up if there's, well, let me rephrase that. If the market's going to go up, there's got to be buying. The orange star tells me I see a lot of volume. So you're moving up strongly on volume, but you're running out of buyers, and then when you retest that level, you nick it by a couple ticks, and you get this little yellow triangle. This means I'm seeing a lot of buying. A lot of buying on this bar, but price is not going up. This is a short signal. If you're seeing a lot of buying, but the price is not going up, that means the sellers are stepping in and absorbing all of that buying. It's a legitimate short signal right there at 73. I did not take that trade. This is in the opening 5 minutes, and my rules are very clear that I won't take a trade in the first 5 minutes of the market open. So I missed this down move, and then we get down and we go through the stock market open. We get down to the open again, and there's a big fight here between the buyers and sellers at the open. We get to the and we fall through the overnight low, and here it gets interesting. We set this level right here, 48.17. We advance and we test it, and then again we see not a lot of sellers now. That's exhaustion. So I want to get long here. Entries 26. We actually test that level by a couple ticks and then close up. All right, so take a little bit of heat there, and then the market, once it breaks through here, it advances hard. That in-bar green triangle you're seeing is acceleration. I'm seeing lots of buying compared to selling in this bar. And we go into a little bit of a consolidation and pop out of it strongly again on acceleration. So I'm feeling pretty good about my long at this point as we break through the open, but then we run into trouble because, again, on volume, I see acceleration, a lot of buying compared to selling, but I immediately fail. And I don't just fail in that the next bar closes down. I fail with exhaustion, meaning I don't see a lot of buying on this bar. The price can't go up if there's not buying. And in fact, I see in-bar red triangle pointing down means I'm seeing a lot of selling in that bar relative to the buying. In fact, I can show you specifically what I'm talking about. This is that run up here. Up here you see a couple hundred contracts going off at the highs at the top of that move. And then when you come back to the retest, 20. You ran out of buyers. You ran out of people willing to pay more. And as a result, this is a short signal. Now I'm long, so I've got a problem here. I'm above the open, so I wait because a pullback to the open opens an area that's often defended. In this case, it closes below, closes up into exhaustion again. Now I have a problem. My long's in trouble. So I flattened a long on this bar and offered short at 55. Now there's still a bit of a battle here. We come back up again, and we actually nick this level set here by the market, 48.59. We nick it by a couple ticks here on absorption. So a lot of buying in this bar, but the price is not going up. That means sellers are stepping in, absorbing all that buying. Every trade has a buyer and a seller. If I see a lot of buying, the price should be going up, and if it's not, then you want to take the other side. And in fact, we get the same scenario here. We retest this level, and we see exhaustion. We run out of buyers. So at this point, I'm feeling very good about my choice to reverse. I shorted again right there. And this bar right here, I'm starting to feel really good about that choice. And this here is a legitimate short signal entering at 50 or 52. And you can see what happens next. We We fall into the overnight low, a little bit of a fight there, and then we just collapse down into the previous low of day, and I exited right here at 47.55, 100 ticks, $1,000 per contract. Now you can see that trade taken live and managed live on the free daily videos on my site. Now, at this point, you're probably thinking two things. First, hey, if I had that indicator, I could catch that move and make a lot of money. And it's not true. And we're going to talk about why it's not true. You need far more than just that SETI or indicator. The second thing is probably, you know, this Shane guy wants to sell me that indicator, and that's how he makes his money. And that's a thought that's born of a hard-earned skepticism. It's also not true, though. That indicator is not for sale. I don't sell indicators and I don't sell trading systems. I'm interested in teaching you how to trade. And to learn how to trade, you have to understand these three challenges we're going to talk about and how to overcome them. Now, most people have only given consideration to one of them. These challenges, though, they're based on understanding a key concept, absolutely crucial that you understand this, and I call it market biology, and I'll define it for you shortly. We're going to switch back to our presentation to get started. There's some technical questions coming in. Just hang on to those. We'll get to them. We're going to start with this statement. Most people fail. In fact, the statistic you hear cited is 95% of volume traders lose all their money within a year. 95%. So think on this next statement during our discussion today. If everyone is failing at something and you want to succeed, you have to do something different than what they're doing. Now that's so important, I'm going to say it again. If you want to succeed where everyone else is failing, if you want to stand out, you have to do something different than what everyone else is doing because what they're doing isn't working. The question is, why is the failure rate so high? And I'm going to answer that question for you today. One way to approach this question is to look at what everyone else is doing and don't do that. Another way is to look at what they aren't doing but should be doing. And it turns out that this is where we find our answer. When people start trading, they begin by learning technical analysis of the markets. Bar charts, tick charts, moving averages, oscillators, stochastics, etc., etc., etc. And this is important stuff. There is a basic foundation of knowledge that you need to have in order to understand what the market is doing. But notice I said what the market is doing, not why the market is doing it. The why is far more important. And this, in fact, is the first challenge you face as a trader, figuring out what technical method you're going to use. And here is where everyone runs into trouble because everyone focuses exclusively on learning technical analysis, thinking that this is the primary skill needed to be a successful trader. And it's no surprise that they think this because there are hundreds of indicators out there and just an infinite way of combining them. And everyone is talking about all the different ways to analyze the markets. So to a newcomer, it looks like this is where you need to focus your attention. It's perfectly understandable. But this is where everyone falls down. The beginning of understanding why nearly everyone loses money, why nearly everyone fails is this. Technical analysis of the market is an intellectual activity, but trading is not. Trading is not an intellectual activity. Analysis is. Technical analysis is a logical thought process. It uses the puzzle-solving part of your brain, the cognitive functions, the frontal lobes. But trading, actually placing a trade with real money on the line, real money, your money, at risk of being lost, is not an intellectual activity. A different part of your psyche is involved, And it's a part that hasn't been developed by your efforts at learning technical analysis. In fact, you can be an expert analyst, but still be an infant trader. And there's a lot of people in this category, a lot. Technical analysis it's a mandatory skill, but it's not the only skill you need to be successful as a trader. And when you develop your technical analysis skills, you're not developing the skill you need to actually trade with. Remember, everyone's talking about the technical analysis of the markets, but everyone's failing. So if trading's not analytical or logical, then what is it? When you have something of value at risk, your body reacts the way nature intended it to. And it doesn't matter what's at risk, only that you care about it. And the more you care about it, the greater the reaction you'll experience. If someone or something tries to harm you, your body automatically, autonomously reacts. And we call this the fight or flight syndrome. If there's a threat to your child, say your toddler steps out into a busy street, your body reacts and you leap into action to save your baby. I'm speaking as the father of 3-year-old twins. Those two are like herding cats. This response, it's physical. It's in your biology. It's a physiological response. You have no control over it. It's not intellectual. It's not rational. It's autonomous. You have no control over it. In fact, you don't want to control it. It's an important part of your survival mechanism as a human being, but it's working against you as a trader. And I'll clarify why in a moment. Your body, it doesn't make a distinction between a threat to your life, a threat to your child, or a threat to your livelihood, or your reputation, or your ego. It doesn't understand there's a difference. It reacts the same way, regardless of the type of danger you're in. And when you have something of value at stake, your body responds. And the greater the value you place on it, the more intense that response. So when you place a trade, you put money at risk. You value that money, and your biology responds. But you have much more at stake than just money. Much more. We need to talk for a moment about why you're trading. Most people are trading because they want to secure a better future for themselves and their loved ones. When you strip away everything else, this is what you find. You want to provide for your retirement, you want to provide for your child's college education, or you don't want to have to worry about being able to provide because of the decisions our political leaders are making, or what your industry is doing, or what the economy is like. You could say you want freedom from worry or control over your own destiny. So beyond the money that's at risk, this is what's at stake. And this is what your biology reacts to when you place a trade. All the hopes and dreams you have about being successful in the markets are now tied to this trade. All the fear, anxiety, doubt, excitement, greed, euphoria, all of it is amplified and concentrated down into this one moment in time. And this happens all day, every day when you're trading. You can see the fear in the market every day as traders bail out of positions that are killing their accounts, and the excitement as traders chase the market up or down. Both behaviors are in reaction to a biological response, and both are losing propositions. And now we've arrived at why nearly everyone loses money. The vast majority of traders make decisions that are rooted in their biology, in their basic human nature. They're acting either in response to excitement or as a means to alleviate their fear or anxiety. And the markets have evolved to take advantage of this. They've evolved to take advantage of human nature. This is the reason why nearly everyone loses. There is a Darwinian process underway. It's been going on for many, many years, and by this point in time, is honed to a razor's edge. And this is what you're jumping into. And if you don't understand what's really going on, if you don't understand the market dynamics underlying why prices move, then you're going to fail. And it makes perfect sense when you think about it, because trading is a zero-sum game. There is a winner and a loser. You are in competition with every other trader out there, and everyone is trying to take money from everyone else. The money that you make is not created out of thin air. It comes from someone else's account. For you to make money, someone else has to lose money. Now, it's more useful to examine that statement from the other direction. For someone else to make money, you have to lose money. It's competition in its purest form. Now, obviously, you don't want to give your money to some other trader. So they have to trick you into doing the wrong thing. Or, stated another way, the market has evolved ways to tempt you into doing something foolish, and it does so by preying on your natural biological reactions to having something of value at stake. In order to be successful as a trader, when you are most afraid to do something is when you most need to do it. And when you're the most excited is when you most need to be cautious. The vast majority of traders make biology-based decisions in response to fear or excitement. If you want to be successful as a trader, you have to do the opposite. You want to be on the other side of the traders making these emotional decisions. They are the ones that are succumbing to the siren call of the market, and they are providing you with the opportunity to profit. So think about it for a moment. Who's on the other side of your trade? Every trade has a buyer and a seller. Who's on the other side? Is it a newbie chasing the market? Or a professional trader who's been patiently waiting for this trade setup all day long? And who do you want that person to be? For that matter, who do you want to be? The predator or the prey? Because that's the relationship you're in. This is not a gentleman's game. And I love this image because you can look in that cat's eyes and see that he is the apex predator and he knows it. And that's who you want to be. So people new to trading spend all their time and energy on navigating through the maze of countless technical analysis methods and no time at all on mastering their biology. And because of that, they can't effectively implement the technical method because a different set of skills are required to actually trade in the face of your natural biological reactions to the market action. This is why your actual results don't meet the expectations from your analysis, and it's why nearly everyone loses. This is the second challenge you face as a trader, mastering your biology. It's much harder to do than the technical analysis challenge. The question becomes, how do you master your biology? Now, understanding that this is a problem is half the battle, but your dilemma is this: you're human. You're not a computer program. You can't change a few lines of code and recompile. You can't decide at an intellectual level that you're going to behave differently and then expect your body to follow suit. It doesn't work like that. Think about someone who's trying to lose weight. Telling them to eat less and exercise more is useless advice because they already know that. It's very hard to do. Much better is to show your friend who's trying to lose weight how to structure their life so that they eat less and exercise more. And what you need to do is structure your trading in a way so that you can master your biology and develop the discipline you need to be a successful trader. And this is what we do at therationaltrader.com. We provide that structure. Now, we're going to spend the next few minutes talking about how you go about mastering your biology. What we're talking about doing here is retraining your body. Your body's a biological system. And there's only one way to retrain a biological system, and that's through repetition. It's the only way. You must repeatedly experience the situation you're trying to learn and execute the required actions under conditions as close to real as possible. Repetition in a safe environment is the only way to retrain a biological system. I'm going to give you two examples from other walks of life and then show you how we apply this to learning to trade. The armed forces are a good example. In the Army, A soldier must be trained to perform under the stress of battle, and the Army prepares them for this through endless repetition, drill after drill after drill. They will put you through basic training, and you'll come out the other side able to field strip a rifle while riding a bicycle blindfolded through a riot. Now, the martial arts are similar. I have a black belt in a Japanese style of karate called Shito-ryu. I was an instructor for many years at the main dojo in Southern California. Now, in the martial arts, if we want to teach you how to block a punch, we'll show you what to do technically, how to make a fist, where to meet the attack, what's the angle of your arm, how to step out of range, etc., etc., etc. And then we'll have someone try and hit you many, many times. At first, especially the first time, you're basically terrified because your body reacts the way nature intended it to. But through repetition, the fear recedes, and after blocking the 100th punch, it's routine. And after the 500th, it's downright boring. And it's the same thing with trading. By the 100th trade, it's routine. And by the 500th, it's so automatic you don't even think about it. It's like tying your shoes. It's something you just do. The challenge for you as a new trader is to get to the 100th trade with your account intact. Get to 500 and you're well and truly on your way. Now I'm going to tell you a story that illustrates this need for two sets of skills, a technical skill and a biological skill. It's a true story. In the Japanese style of martial arts, we do something called kata. It's a series of movements that you perform to practice your technique and ultimately to demonstrate your mastery of the technique. And you do it by yourself. And by yourself, I mean there's no one attacking you while you're doing it. All right. And in my style, there's 50 or 60 of these different katas, which we would translate as forms. And they range from the beginning, something you do as a white belt, to the very advanced. And they'll have anywhere from 30 to 150 different moves in them. What you're looking at on screen is 3 moves in a kata called Jion, so a somewhat intermediate level kata. Now, there are people, fellow black belts, who are absolute masters of technique. You watch them perform kata and it is just awe-inspiring. They move with such speed and power, poise, grace, control, precision, that to watch them, it's like poetry in motion. Absolute masters of technique. But they can't beat me in a fight. They're far superior to me technically. But you take that same person and you put the gloves on and you get in the ring and they lose every time. And sometimes it's not even a contest. They lose so quickly. Now, not everyone, but there's a large number of people in this category. And the reason is it's a completely different game when someone's actually trying to hit you. And with trading, it's the same. You've done your analysis, but it's a totally different game when you actually put real money at risk. And this is the epiphany that I had after the requisite years of pain and suffering at the hands of the market, is that the skill that you need to be successful as a trader, it's identical to the skill that you need to be successful as a martial artist. Both activities have a technical component. Trading has an intellectual technique we call technical analysis. In martial arts, it's a physical technique. Both require a mastery of your biology to implement that technique. And once I understood that, then I knew what to do. I knew how to set it up to learn how to trade because I know how to teach martial arts. Our goal then is to get you to your 100th trade with your account intact. So if you take 2 trades a day, that's 10 trades a week. We're talking about roughly 10 weeks. This is your first checkpoint. Get 100 trades under your belt while keeping your account intact, and then stop and evaluate how you're doing. What areas do you need to work on? What we're doing here is, in a very controlled way, allowing you to experience enough trades and market action to beat the fear, anxiety, doubt, excitement, greed, and euphoria out of your system. You're retraining the biological system that is your body. You need to experience the fear that sets up. Let me rephrase that. You need to experience the fear, anxiety, and doubt that comes when a trade sets up. And you have to enter the market. You've got to pull the trigger. You also have to experience the anger when the market stops you out. And the frustration when the market takes off without you. Or worse, and this is the one we all hate, the market just barely stops you out before turning and going in your direction. In other words, there are times when you need to act to enter the market and times when you need to wait. Both scenarios generate a biological response that you must experience and process. And your job is to still do the right thing no matter what you're feeling. It's very hard to do, but it gets easier over time. Because over time you learn at a deep level that there's nothing to fear. There is no real danger here. And that physiological response, that biological response lessens to a point where it no longer affects you. To do this, you need three things. An environment where you can experience what you need to safely, an understanding of what you need to do technically, and a guide or a teacher or a mentor to show you the way and help you stay on the path. Now, let's talk for a moment about setting up a safe environment to trade in, because for learning to trade, it's the most difficult element to deal with. In the armed forces, they'll teach you everything you could ever possibly know about that rifle, but they don't give you live ammunition while you're doing it. In the martial arts, we employ gloves and pads to avoid injury. In trading, a safe environment is one where you cannot damage yourself too badly if you make a mistake or you lose control of yourself. And this equates to taking a small loss rather than a large or catastrophic loss. Now, it's a lot more challenging to set up a safe environment for trading than it is for the armed forces or the martial arts. And the reason is you must have real money on the line or you're wasting your time. You should trade on a simulator only as long as it takes you to learn your trading software and your trading system, because on a simulator, you're not developing the primary skill you need to be a successful trader because you've got nothing at stake on a simulator. And with nothing at stake, your biology is not engaged. Since you have to have real money on the line, you have to be trading in live conditions. Live conditions means you're trading against professionals. I can't think of another case that's like this, where you have to learn in a live environment against professionals who aren't your friends. It's one of the reasons it's so hard to learn how to trade. Imagine learning a martial art with a training partner who's a professional fighter who's trying to knock you out. This is the third challenge you face as a trader. There's no practice environment. You must learn to trade in live conditions. Let's summarize why nearly everyone loses money. The primary reason is because of a fundamental misunderstanding about what skill they need to learn. And the secondary reason is they have to learn in live conditions. People new to trading spend all of their time and energy learning technical analysis methods and no time at all on mastering their biology. And while technical analysis is necessary, it's a logical thought process, but trading is not. Actually placing a trade with real money on the line, your money, at risk of being lost, engages a different part of your psyche, and a different set of skills are required. A different set of skills needs to be developed to actually trade in the face of your natural biological reactions to the market. Now, you are struggling to deal with your natural biological reactions to having something of value at stake. So is almost every other market participant. And that's what market biology is. Your goal as an aspiring trader is to work through the biology-based issues within yourself and recognize those same issues being expressed by the other market participants and then take advantage of them. Let's go back to the sumo slide for a moment. This is a pretty accurate representation of the situation that you're in as a new trader. especially as a new trader with a small account, you're not that big guy. You're the little guy. And if you engage in the fight you see on the screen, you're going to lose. It's obvious. What you'd like to do is find another little guy to trade against. Trading is somewhat amazing in that it is one of the few endeavors in life where you can choose who to compete against to the extent that you can find them. Think about professional tennis players. They don't get to play against amateurs. They have to play against other ranked players. If we go back to here, I talked about I see a lot of buying here. Ask yourself this question. Who's buying right there? You think it's a professional trader? For that matter, who's selling down here? I want to trade against that person. In fact, I did yesterday. Here, it's the same story. Who's buying up here? Who's buying right there? And here, who's buying? These are people getting excited about the market moving up. And in fact, you can see it. You can see it pretty clearly. Market set that level right there, and people got excited and started buying. I traded against them yesterday, and they gave me their money. So one of the things that you want to do as an aspiring trader is find those cases where you're trading against unskilled traders. You could try to figure out what the big boys are doing and trade along with them. But it's actually a little difficult to do because they know you're trying to do that, so they disguise what they're doing. But also because they're much better capitalized than you are. And so even if you get it right, you often struggle because they can withstand greater price fluctuations than you can with your smaller account. Now, at this point, I think I've gotten us back on track here. What I'd like to do is, there were a number of technical questions at the beginning when I talked about, I see a lot of buying here, I see that I'm running out of buying. What is the method that I'm using here to understand what the other market participants are doing? You'll notice you don't see moving averages, stochastics, oscillators, anything like that on screen here. And it's not that they don't have value, but people get so caught up in the technical analysis that they forget that there are people on the other side, and it's what those people are doing and thinking that's the most important thing in your trade. I understand why I'm taking a trade. The question is, what is the person that I'm buying from or selling to thinking? If you understand what they're thinking, and then you also understand why the basis for your trade, now you're in a position to be very successful. Okay. So what I'd like to do here is invite you to a tutorial on how I trade. It's free. There's no cost. And we're gonna go over these signals here. These signals are based on order flow. The orders coming into the market and how price is reacting to those orders. I can tell that there's a lot of buying here, and I don't have time to show you today, but come to the tutorial and I will explain in a very clearly, in a very complete way, how you can tell there's a lot of buying going on here. Price is not going up. Look to short. There's a lot of selling going on here, but you're running out of sellers. You're running out of selling interest. You're exhausting. The move is exhausting itself. Or the fun one is both. There's a lot of buying getting absorbed, and when you retest that level, you completely run out of buyers. Okay, so I'm gonna send a link to you to come join me next Saturday. All right. In fact, Reed can post it as well. He'll probably do a better job posting it than me, since I always seem to mess it up. I'm going to answer this one person, link to tutorial. I can spell tutorial correctly. All right, and so I invite you to come join me. Again, it's completely free. All right, it's next Saturday at 11 o'clock Eastern, 8 o'clock Pacific, and I'll show you what I mean when I say try to find an unskilled trader to trade against and how to do that. And it's one piece of that puzzle, right? There's four pieces of the structure. There's three challenges you've got to face. Technically, you have to have a way to look at the market, but you've got to figure out the structure that you need to master your biology while you're doing that in the live environment. So this is kind of what we do at therationaltrader.com. I send to all. How's that? That's better. And I think, Reed, can you send that out as well? He should be sending it out shortly.
Where is that link at? I'll be happy to.
I emailed it to you yesterday, but I actually just posted it as an answer to one of the questions.
Okay, let me pull it out here real quick then.
So Thomas is asking, how did you know to sell against those guys? And while we're waiting for Reed to find that link, I see, well, so I was long from here, right? Because I saw exhaustion. Pretty gutsy trade given the oil market's downtrend. Got a nice little move up, and I see a lot of buying here. I see acceleration. People are excited about the market moving up. But this is screaming at me that there's a problem. There's a problem. Oh, I'm sorry, wrong button. I'm running out of buyers. Reed, can I post that in the chat interface?
Yeah, you can. I'm not seeing it in my email, but I was just going to take it directly from that message you sent.
Did it go out?
Yeah, I'm seeing it. Hey guys, can you give me a yes? All right, great. Yeah, thank you, Ahmad. Looks like that did go out all the way. Sorry about that. I couldn't find it.
I think I have like just a couple minutes here. Let me just show you what we're talking about here. Let's go look at these two bars, these three bars. All right. This is the footprint chart of these three bars right here. Okay. And what I'm doing is I don't like this chart because it's too noisy. It's too hard for newer traders to deal with all the input coming at you as these bars draw. So what I've done is developed an algorithm that takes that information and plots it on this chart, making it much easier to deal with. But if you just look at the chart, you can see there's 300 contracts being bought right here. And yet when I retest, only 20. What happened to all the buyers? It's not going to go up if you don't have more buyers. You couldn't even get 70s to trade. Nobody was willing to buy at 70. And only 20 people at 67, 68, 69. A huge clue that this move has run out of steam. Enough that I got worried, and then once I saw that same exhaustion signal here, I flattened my long and then got short and caught this move. Okay? All right, so I think I've gotten us back on track here, Reed, in terms of time. Everyone else, if you sign up for that, the tutorial next week, we'll spend 2 or 3 hours talking about exactly what's going on here and how how I look at the market. Because what I'm doing, this is a very sort of holistic view. You're working through some biology, but so are the other market participants, and you want to find the people who haven't figured it out yet and trade against them. The platform you're looking at is Sierra Chart, and Sierra Chart has built into it these footprint charts. Sierra Chart's an extremely powerful platform. Reed, are we done here, or can I take more questions?
It looks like you got about 2 more minutes, so yeah, if you can squeeze a couple more in there, I'm sure they'd be happy to get some answers.
Oh, Barry, you're a Sandan in Shotokan. I see. Shotokan's very similar to Shitoru. Or I should say Shitoru is very similar to Shotokan. It's a blending of Shotokan and Goju. Maribel, he sent out that link to you. It's right in the answer column. Kathleen, at the very beginning you asked, how do you know that there's buying there? Come to the tutorial and I'll answer that question in a very complete way. You'll understand exactly. Okay, I think we are, yeah, exactly, Barry. Those martial arts styles come from the same root. Okay, I think we're done today. I'd like to thank you for joining me. I hope you found it. I hope you found today's presentation interesting. For a lot of people, they've only ever thought about the technical component, and they haven't thought about the biology issue. They haven't thought about. People call it trading psychology, but I don't like the term psychology. Psychology makes you think of laying in a couch talking to a professional therapist about the flaws in your thought process. There's no flaw in your body. You're not broken. Your body's reacting the way it's supposed to. It's just not appropriate for this environment. And because of that, you've got to work to retrain your body.